we're talking $100 billion more or less, $98 billion in cash, and this has been accumulating for some time at Apple. The last time they paid a dividend was something like 15 years ago. Now they're finally doing so, and also doing a share buyback. What's going on?
Well, it's sort of overdue and a good start, is I guess the way I would characterize it. It's going to cost about $30 billion altogether with that dividend initial level, and then the stock buyback that they anticipate about $10 billion. That's a small buyback, but it probably is not ill-advised to keep it small at this point because they don't need to goose the earnings per share or anything like that.
Right.
Now, the interesting thing about Apple is I've always said, having cash on the balance sheet is always a great thing for a business. It gives you flexibility, it lets you have lots of different options, and investors can get some comfort that there's some cushion there. The problem is when it gets that big, it really, to me, is bigger than any productive use could really offer you, and basically becomes a little bit more of a source of mischief potentially down the road, especially when it's growing at tens of billions of dollars per year.
It's an interesting idea to say the source of mischief down the road. And people obviously hold Apple's management, even after the demise of Jobs, in high esteem. But that much money is going to be around for a long time. And as you say, they're actually accumulating it as they go.
And one of the big reasons they do accumulate it is Apple is remarkably efficient on research and development. It spends barely $2.5 billion a year in R&D. That's about 2% of sales. It's just rock bottom relative to other technology companies. It's simply, it has the magic and it puts it into
products. So it just doesn't really need that much money. I mean, as you said, you want to have that stockpile there to sort of build your R&D. But even $50 billion is going to be plenty to find the next wonder product.
Well, hopefully, right. I mean, in other words, if your problem is big enough that it takes $100 billion to get out of it, it's an even bigger problem than you can anticipate Apple having. So yes, I think this is smart. Look, there seemed to have been kind of some kind of a temperamental thing about Steve Jobs, about the idea of having to cater to Wall Street and pay a dividend. Now that it's Tim Cook, now that they actually have a board that's going to take some control, it seems like it makes sense. And what's interesting too, a lot of people aren't talking about this. So it's going to throw theoretically $30 billion sort of into the stock market just by this one stock alone, which is close to 4% of the overall market. That's not insignificant at a time when individual investors pulled $68 billion out of stock since October.
It is. It speaks once again to the
presumably you can reinvest the dividends. It's not just cash, but nonetheless, it's a remarkable amount of sort of a transfer of a slug of cash.
Well,
from
some
one
people are also saying though
public.
that this is in fact an attempt to offset merely the dilution of Apple shares that comes with stock options being exercised largely by Apple employees.
For sure.
So people describe it as actually a transfer from the balance sheet to employees rather than shareholders.
Well, it could ultimately become that, although $10 billion, I mean, this is a company that's worth close to $600 billion. So that's a very small part of the overall equity base that they could even repurchase. But that is true. They have to kind of combat that upward drift of share issuance.
$600 billion, by the way, is larger than the GDP of Switzerland. So we're talking about a company that is really sitting on a massive amount of money. And it's earning, the $100 billion it has there, it's earning something in the order of like 1%. We all know where interest rates are these days. So that's obviously a factor in this, right?
Right. It was obviously losing ground to inflation just by having the cash sit there, without a doubt. The one thing I would point out about its market value, Apple's market value approaching $600 billion. Now, take it for what it's worth, but the handful of companies in history that have reached more than $500 billion, most of them during the tech bubble, plus Exxon in 2009 when the oil price spiked, the $600 billion range was pretty much the Waterloo.
Wow.
Now, obviously, $600 billion today is not the same as $600 billion 10 years ago when Microsoft reached it, but it's something
Apple,
to keep
of course,
in mind.
did actually have a death a while, 10 years ago, and then came back from the dead, so it's living its second life.
That's absolutely true.
Another factor here. But it's what's it likely to do to the share price? And the share price got a bit of a pop today, but we're talking about almost $600 share price. It's like usually, as you said, they're usually doing this to goose EPS to sort of buy them on the cheap, but these are not cheap shares.
Well, this is a stock that before today was up more than 40% year to date, and people keep talking about, well, it's only a 1.8% dividend yield at this level. Well, guess what? That was a $240 stock last summer at the low.
Well, look, we're just looking right now at the 5-year chart, and you've seen as it has just picked up.
And that was so. In other words, this level of dividend at the low from last summer, it was a 4.5% yield. Which actually kind of is a cash cow when it comes to blue chip stocks.
No, it truly is a remarkable company in this regard. So, is there anything to be said for the fact that this has come on the back of the announcement? As I say, we got I think they added $70 billion in market cap just because of the announcement of the new iPad.
Sure.
I mean, and you've timed that now with a buyback and a dividend.
I think what it requires is if you're an owner of Apple at anything like these prices, you have to say, what can it now do to kind of wow us again? Because you've had a lot of whatever good news you could anticipate kind of build into the stock. Obviously, you're going to see the uptake of the new iPad, even though a lot of the critics are saying it's not that big of a revolutionary change. So I do think you have to step back and say, let's not expect this thing to go up 40% every 3 months. I mean, that's insane. We did have this feeding frenzy. People called it the nothing but Apple market, the NBA market. Yeah. And that's because all kinds of fund managers felt compelled to own it. When it becomes 3 or 4% of the index that you're judged by, you almost can't own it, can't not own it.
Right, yeah.
And that's always a problem.
Phenomenon itself.
If people keep saying where else are you going to go, then you have to sort of wonder if there's going to be a little bit of a gut check.
It's also able to produce countless opportunities for us to talk about one particular company. So thanks for coming on for once again to talk about Apple. This Michael.
You got it.